Good morning, everyone. You are watching live market outlook for Monday, 11th of June 2012, as expected and being widely announced during this Saturday. The final action took place and the bailout for Spain was executed, despite the Spain trying to delay and avoid this kind of help for quite a long time, saying that they can handle the situation. However, the situation, the crisis with the banks, that started basically at 2008, now just reached the peak, and there was no way out, as Eurozone finance ministers rushed and put the Spain on an EU-funded rescue, mainly for its debt-stricken banks, to preempt the threat of bank run if Greece's debt crisis flares again. But any respite for Madrid and the euro might be short-lived. This is according to the analysts' comments this morning, that a quite pessimistic tone still dominates, despite very good reaction of the market and gap higher opening on euro and on euro during the Asian session. Still a lot of caution seen within the analysts and especially investors, as the current situation is not much better compared to the last week or weeks behind, as Greece still facing the elections in the next Sunday, and this is actually going to be the key of the future of Europe, when we'll see whether Greece will be leaving the Union. That will be quite a catastrophic scenario for the bloc itself, or there'll be sort of a solution. A number of top officials from Eurozone are involved currently in extinguishing this fire that is spreading around and threatening to hit the whole bloc, especially the countries on the south that are mainly exposed. Greece, Spain, Italy, Portugal are the top ones. As today's calendar is quite thin, we're going to focus first on the technical outlook for the major currencies and commodities and see the situation in the market and expectations for today. As I would say, the highlight is on euro, as you can see the quite a strong move higher and gap over 100 points opening of last Friday's closing price at 125.00, and today's opening at 126.38, so over 100 pips higher, gives some positive tone on its short-term corrective action of previous Friday's 1st of June low at 122.87. It is significant that the pair regained our next target. This was mentioned in the last Friday's analysis, 126.20 previous highs. Also, it marks a 61.8% retracement of the latest down leg from 128.23 to 122.87. As last Thursday, Friday pullback of previous high at 126.24, when this level was briefly tested, but gains stalled at this point. Support was found at 124.40 zone. That was previous low, and that was actually initial support ahead of another significant at 124.00. That was actually seen as a trigger, and as the ground was found there, subsequent rally resulted in regaining 125 on Friday's closing, and the gap higher opening now is giving more optimistic outlook for the pair for further extension higher, with the target on the upside in case of a break of overnight's low at 126.67 to 126.86 and 127.00 seen as the next immediate targets. Some corrective action might be seen, as quite good offers were seen at 126.50 zone, where the overnight and the European opening price action was limited, with the pair still in sideways movements within a very narrow range. Further easing down is not ruled out at this point, as hourly studies are at their extreme points, and hourly RSI is just emerging out of the overbought territory, with some extension down seen towards 125.90. What is the 125.90? First of all, there is 126 as figure support S, the 126.20 previous resistance is now under pressure and been already tested briefly. 126.00 and 125.90, where is the 20 days exponential moving average hourly one, while the dips should ideally be contained further extension lower to 125.50, where is 55 days exponential moving average, to keep the current bullish structure intact for possible further extension higher. Negative for the pair would be filling the gap and regain of downside levels at 125.00. That would turn the tone more bearish, while a loss of 124.34 last Friday's low with the sideline bulls and threaten for further reversal lower. 124 as set previous trigger again would be acting as a trigger for a return down towards 122.87 as daily structure is still rather negative, but gain the strong gain of bullish momentum despite studies being still in the negative territory, sees potential of further extension higher. So far 38.2% retracement was seen on a break of a very significant 20 days moving average at 125.80, and of course again of 126.20 now would be good signal for opening a way for further retracement of the down leg from 132.82 1st of May peak that bottomed at 122.87 on 1st of June. So 1 month descent has now been retraced by part of 38.2% with the quite supportive outlook in the lower and the larger time frames, seeing potential for a further extension higher, and keeps the upside for now favored for the euro dollar. As said, only loss of 124 would be bearish for the near-term price action of euro dollar. The cable followed the euro's action higher, also a slightly lower gap higher opening after closing on Friday at 154.57. Overnight's opening was seen at 155.10, and the short-term bullish structure of 1st of June low at 152.67 now remains in play, especially that last Friday's dip was contained at 154 zone. That also marks the ascending a trend line of 152.87 that in this case contained the dips and the further extension higher towards a very significant 156 level. This was the previous strong support, now reverted to resistance, and was tested last week on 7th of June where the gains stalled, and the subsequent pullback again being contained by bull trend line at 154. So far the positive tone still dominates with currently corrective pullback seen of days high seen at early this morning on opening of European session at 155.72. Ideally the days low at 155 zone should be containing any stronger reversal along with the 154.90, where is the 55 days exponential moving average, while filling the gap and the dip below 154.50 would weaken the immediate bullish structure and risk return down towards the raising bull trend line at 154.25 and the 154.04 low of last Friday, and only loss of this level would be a signal for further holding bulls in play, as the 156 will stay intact. For now, the 55 days exponential moving average also acts as a good support at 155.00. Ideally, the dips should be contained at or slightly below this level in order to keep the short-term bulls fully in play, while break below 154.25 and especially 154 zone would sideline short-term bulls and keep then the focus basically lower on the upside. Break above 156 to open 156.30.40 and more significant 157.15 seen as the next upside targets, while the loss of 154 will be focusing 153.20 higher low of 5th of June, as well as 153, currently 153.20, where is also the long-term ascending bull trend line of 2009 low at 135.00. The dollar yen holds its positive, short-term positive tone of 77.65, 1st of June low, with the recent last week's price action approaching and stalling on approach to 80.00, our next target, and a strong barrier as subsequent pullback was contained above 79.00 previous previous support, now acting again as support. It was turned to resistance and back to support. This is the higher platform of 18th of May, where the one of the attempts for corrective action was established, and the loss of this level and regain again, now it's acting as a strong support along with the 78.67 200 days moving average, as well as broken bear trend line at 78.55. So holding above 79.00 keeps the near-term bulls in play for a possible further corrective action of the larger downtrend from 84.17 yearly low that bottomed so far at 77.65. As said, break above 200 days part of the moving average and a break above descending main bull trend line. Main bear trend line keeps the near-term focus higher. We need to see a gain of 79, 78 and 80.00, as well as 80.13, the high of 22nd of May. That will be a signal for a stronger corrective action that will open the next significant barrier set 80.60. So far, 879.00 holds the downside, where is also 55 days exponential moving average and the bull trend line of 77.65, with the 20 days moving average more closely maintaining the current positive action, and any corrective reversal should be ideally contained at 79.30-20 zone and not below 79. That will be bearish signal at this point for a fresh extension higher and a further retracement of the down move from 84.17 to 77.65. We're going to take a look on the Fibonacci levels and see from this point, as 80.00, 80.13 also marks 38.2% retracement. That will be our next strong barrier. Some caution is seen on the crossing of 55 below 90 days moving average. In this case, this might be at 80.50. This might be limiting any action upside for now, is acting along with the 80.60 as a strong barrier. If we see break above 80.60, then that will be a good signal for a much stronger corrective action of 84.17 to 77.65 down move. And Swiss further lost the ground after current short-term corrective action of 97.69, 1st of June high. Left a lower top at 96.56 last Friday, with overnight gap lower opening and break below 95.00 zone. That also marks the near to 61.8% retracement and the recent low posted on 7th of June, further weakening the structure. Currently, some corrective action is seen after a dip to 94.77 overnight low, with regain of 95.20. Now looking for some a stronger corrective action. 95.50 is the initial static resistance. Just below this is 95.41, the 20 days exponential moving average, and 95.66 55 days one that should ideally cap any stronger action higher. Only regain of last Friday's closing levels at around 95.90 and the 96.00 zone would be more supportive for the near-term action, as this would refocus 96.56 last Friday's peak. So far, the larger picture still shows the negative tone dominating on the lower time frames are still with the dominating negative tone, and basically only the gain of 96, 50, 60 zone, and the next lower top at 96.75 would prevent pair from further sliding, and would turn the focus higher. Until then, the downside remains still in focus, and any failure to fill the overnight's gap would be signal for a further extension lower, with the 94 break below 94.77 to open immediate support at 94.65 ahead of more significant 94.00 and a very strong support at 93.66, high low of 21st of May 2012. The yellow metal was briefly supported by overnight's the weekend's action of the Eurozone officials that supported Spain with the slight gap higher opening seen overnight, hitting peak of 16.08, the very significant resistance, but so far the gains failed to hold above this level, and subsequent reversal during the night have so far filled the brief gap of 1594 to 1600, just a few ticks gap, and the threat is seen for a fresh weakness as studies started to point lower with immediate support at 1594, the 20 days moving average, loss of which would be again turning the near-term focus lower, as 1600 as quite significant barrier so far caps the upside. This could be signal for further weakness, as 4-hour studies are still in the negative territory, and all indicators are pointing lower. Immediate focus is seen towards the downside, and 1555 last Friday's low would come in focus. Only sustained break above 1600, 1608, that is the overnight high, would be supportive for the short-term action, while the gain of 1640 last week's peak posted on 6th of June would be more we signal for a more positive action. So far 55 days moving average on the daily chart keeps the upside limited, and in case of failure of the further price action breaking above these levels, and especially 1640 and regain of minimum 1670, the risk remains at the downside, and the possible test of a critical support at 15 1530 zone that might be trigger for that. There is also the 90 days 100 days moving average at this zone, and a break of this level would be trigger for a more significant corrective action of long-term uptrend in past 10 years that moved the price of yellow metal from approximately $300 per ounce from year 2001 to $1,920 in 2011 in September. So far we need to see a gain of minimum 1640.70 in order to prevent such a scenario. Currently it's more sideways movements, but on the larger picture. However, the negative studies on the daily and weekly chart are still keeping the more focus at the downside, and still see risk of test of critical 1530, 1520 support zone. That was all for today. I would like to thank you all for attending our live sessions. During the day, if anything more significant happens, we will repeat this session and record it. You will find it in the YouTube. Windsor's page is called Windsor Brokers Forex. Along with this, you can find a number of short-term technical analysis for majors and commodities. We'll be back tomorrow morning on Tuesday at the same time at 7:00 GMT, and looking forward to see you again with us. I wish you a very nice day and very successful trading. Good luck.